Hello, how do I avoid buying stocks right before they drop? Well, I think it is a work in progress. Let's take two stocks that we have here to see if we can find we can explain it using either one of those two. So TJX. Before we do that, let's use URY that was there. So the way you can try to avoid buying stocks right before they drop is if you are using long option and swing trading strategy, is to choose where you want to buy the stock. So we have our entry strategy with long option and swing trading strategy to be the long support lines passing by the valleys of the mountain. So when the price is moving around, it will create mountain. So you want to be able to determine where the upside of the mountain is and where the valley of the mountain is as well. And so that you can differentiate the support line supporting the upside wall of the mountain and the support line supporting the valley of the mountain. You want to buy the stock at the valley of the mountain. When it pulls back, it reaches the peak and pull back from there to the valley and start going up from there. Once it start making a higher lows and you see about 3 of them, you can buy some share around that support line. So we are using URI in this example. We have arrows showing where we purchase, and we have this arrow here showing where we purchase. We have arrows showing where we sold. Those are the arrows facing down, and we have arrows facing up showing where we sold. We purchased in 2024 using short option and swing trading strategy, and we purchased a raw toward the end of 2024. That's the arrow there, but then shortly after that it was done going up and start going down. So we purchased it right there and sold it there and purchased it again and got stuck in it. So it pulled back, making lower lows. You can see that this low is lower than that one, which is lower than this one. So it was making lower lows, and when it reached the support line that can be a valley line, we purchase it from there. So we color code 2 support lines to be where we want to buy in 2025 using long option line swing trading strategy. So our second purchase there, when we zoom to look closely, we see this low. We use the red bar as the pullback, the low. So we look at the bottom of that candlestick to the previous one. We want to look at each one in the cluster of red bars. They're limited by green bars. So because here you have 2 bars, 2 days in a row there was pullback, but you want to compare the last one, that will be the one after a green bar, to a previous one. So when I'm comparing this low is higher than this one, which is lower than this one, and this one is higher than this one. So in overall I can see that it will start going up from there, and then I purchase at the first or second green bar that followed this higher pullback here. But it was not done, and I purchased it pretty much around that support line after I saw 2 or 3 higher lows. I purchased at the first or second green bar that follow a pullback, but it was not done, resting. So it pulled back again, went up, pulled back again, and start going up from there, and little by little start doing that. So To avoid buying the stocks and then it will drop is, with this strategy, to wait for the stock to pull back to the support line you like to buy it at, and at that support line wait to start seeing higher lows by comparing those red bar to the previous one. Each one needs to be delimited. Each one you are comparing needs to be delimited by green bars for you to consider that as a pullback. And when you start seeing higher lows, that means you can trace an uptrend. When you see about 3 higher lows, you can buy some share around that support line. But before you make that purchase, you can compare how the price is behaving to the previous time when the price pulled back to that support line, to see if it remained at that support line for a while before it left. So when we are looking at that, we'll notice that it started pull back to it before it left. But again, yeah, so there is a chance that it could do that or may not. But in this area, when it pull back to it, it want to pull back down a little bit and then start going up from there. So you just wanted to, to do those comparisons. One, to see if it's going to linger there for a while before leaving, so you don't get in too early. Second, you want to see those higher lows, at least 3 of them, so that you can assume that maybe it's done going down. It start getting ready to start going up, and then you can buy some shares. So waiting for a few higher lows is just an indication that it was done going down, but keep in mind that it could turn around and go back down again. That's what it did here. You are not trying to time it exactly to be precise. You just want to reduce the time you'll remain in the trade if it turns out to if the price turns out to drop again. You want to reduce the time you remain in the trade before it start going up, for you to start seeing positive profit in your account. So yeah, it didn't remain there for long and it start going up. Therefore, any bar you will see, any single candlestick you will see below where I'm putting my mouse will be where we were negative, and any candlestick positive will be where we are positive in this purchase. So this one, we purchase it and then the price drop on us, and that's why I do not want to buy at the support line that is supporting the upside wall of the mountain, especially when it start reaching new high already and has been doing it for a while. You just don't know when it's done. Therefore, this purchase we got in and then the price drop. We didn't sell it at a loss, we just kept it, and then we bought it again in 2025 when the price start going up from there. The dotted line is showing the year, so you have the date on the x-axis from the past to the present, and you have the price on the y-axis from $0 to infinite. And this one, we may profit on it around somewhere here. Anything above it are positive. But yesterday, Friday, the price dropped, but still will be positive in this purchase, because again, where I'm putting my mouse, the corresponding price is below where the price is. And today is October 26, 2025, and we are doing this analysis after the market closed on Friday. So today is Sunday. So the price dropped on Friday, but again, we are positive in both purchases. So if you purchase it and then the price drop on you, as long as you are trading a quality stock, you can just keep it in your portfolio and just keep observing it. But you want it to take that out and not to sell it for a loss. You want to make sure that company is a strong company, has been around for years and will continue to be around for years. So that's why we are trading large cap stocks at the moment, but more precisely upward large cap stocks that are selling on NASDAQ or New York Stock Exchange markets. So, and you can see for how long we held on to it before we became positive in this purchase. Around July 2025, when we bought it around November. But we became positive in this one very quickly. But again, in overall, we'll be positive in both early, but I prefer to be positive in both. So that is how I'm trying to determine how to get in the trade, to avoid getting in the trade too early and then the price will drop. But at this point, I'm anticipating that it can happen because I'm not trying to time the market precisely. I just wanted to buy it around the support line, and I think the key point here is to be able to differentiate the valley line, supporting line that is supporting the whole mountain, the valley line, to differentiate that from the support line supporting the upside wall of the mountain. Because if you buy at that support line and you purchase it toward the end of that climbing up of the price, there is a chance the price might drop while you still hold on to the stock, hold on to the share. So it might get stuck in it for a while for that to go back up there again. Could take months. So therefore, differentiating those support lines and decide where you want to buy it will help you avoid getting in the trade too early, and then the price will drop on you. But then if it happens, you just learn from it, and having those arrows allow us to pinpoint where we purchase. That way we can compare how the price is moving in comparison to those marks that we are putting on the chart, and keep learning from it, and knowing that this is just too higher up to be a support line. Is more like the upside of the mountain, and the downside of the mountain will be drawn at some point for this cycle to end, and then a new one to start. So that is it. But for today's analysis, we like to analyze TJX. So if you are avoiding getting early in TJS entry, if you are avoiding buying it and then the price will drop, well, we have this support line that we trace to buy at, and right now is following this one. We don't know if this is going to be the new valley line or if that is the support line for the upside wall of the mountain. So therefore, buying it at this is a little bit risky, in the sense that if it decided to come down here, you might get trapped in there. But it has been on this rise for a while, since 2022. So it is a long line to assume this will be a support line for the upside wall of the mountain, but it could be. So if you want to buy it at this support line, then you might want it to buy it when it pull back to it and start going up from there. Again, the arrow shows where we purchased it in 2024 and sold. So we purchased it there and sold it there, and we just got out of it and just wait. It came back down to that support line and start going up from there, and come back to it. So the distance, it just keep making new highs after it pulled back from there, went up and pulled back. So make me think that this is more a support line for the upside wall of the mountain, and at some point it might pull back to this line, which is the valley. This is just too low to continue being a valley line, but this could be the one. So we want to wait when it pull back to this and start going up from there. We can buy, so that we can avoid buying it and then buying it at this support line, and if it's done going up, it will just the price will drop and we'll get stuck in it. So that is why we are now buying it in 2025, because the price it reached an all-time high not too long ago, and Friday the price dropped, but again the price is close to the peak and far from the valley line, therefore no buy at this point. So, and the next one we are going to analyze is TMUS. So this one we purchased it in 2024 again using short up to long swing trading strategy, and then in 2025 we say no, let's wait and observe. So you can see that it reached a peak at the beginning of 2025 around February, but then has now gone higher ever since. So we are seeing lower lows building and some lower highs building as well, but you can see that it crossed this line here. So we don't know if it's going to rest there and go up from there again. It has been leaning on that support line since 2023. That's where it originated from, and so we don't know if it's going to rest there and go up from there, but I feel like this line is a support line supporting the upside wall of the mountain. So it's creating some chain mountains there, but we just prefer to wait and buy at either one of those support lines here. Those are longer lines, so it's more, we assume those will be more like the valley line that it might pull back to at some point. Therefore, that when we start going on from here, a few higher lows, we can buy some share there. So that is again one way we are trying to avoid buying this stocks and then the price will drop, because from here to there is quite a bit of gap. It will take a while for the price to surpass where you buy, if you buy on this support line and then is done around this support line and then is done with it and start going down from there. But and Friday the price dropped and now the price is below this support line. So we don't know if this support line ended or if it's just going to rest a little bit and start going up from there. We don't know. Sometimes it can go a little bit below the support line and then go back up from there. But we are just going to keep observing it. But having the highest price in 2025 being around the beginning of 2025 just make me think that maybe it's done, going up. That journey, it has been on for almost 3 years, or we can just say 2 years or so. Maybe it's done with climbing that mountain and is now working on the descent to go back to the valley line to rest and then start going up from there. And we like to wait and buy at the valley line, get in the wagon at the valley line when it's getting ready to start going up again. And that is the strategy we are using in 2025, and would like to continue using in 2026 as well, to enter our trade so that we do not enter it too early. But again, when we buy and then the price drop, we just keep the stocks in our portfolio and just keep observing it. So if we go and check that URI that we come across it, that we use, we can see that the first purchase was in 2024 for 863, and the second one was in April for 632, and we have not sold any of those two yet. So that is when we buy the price drop, we just keep it, because again we know that those are strong companies. They're not going anywhere anytime soon. It's just negative in our portfolio. That is unrealized loss. We just leave it alone, and when it becomes positive, we will sell it. And in this case, when the price pull back to the support line that we will want it to buy in 2025, we buy some more. and then start going up from there. Where we bought it could well pull back all the way here again, and this could have been an early entry, so we'll stay there for a while until the price start going up from here for us to start seeing positive. But it pulled back, didn't touch it, and start going up from there. So we got in a little bit early here, but you could have found multiple ways to get in as well, because you can see some higher lows on this side as well. You can see, like for instance, this low is higher than this one, which is higher than this one, which is higher than this one, which is higher than this one. So if you are looking for 3, that'll be this one is higher than this one, or this one, so that'll be 1, 2, 3. You could purchase it at the first or second green bar that follow this pullback here, and it'll go up, come down a little bit, and go up from there. This will be a good entry because you don't have seen any negative. The price didn't drop below this area from here going forward, so this will be a good entry if you count your 3 higher lows here. So, but is all on one side, going on, following one direction. If you want to see different, like change of directions, and you want to count 3 of it, you might end up buying a little bit higher price. But again, then you'll be comparing this low to this one. So this will be the first, this will be the second one, but those are red green bars though. This is a green bar, but it still form a V here, and this one form a V here as well. So you could compare this one, you have this low compared to this bottom V, that's 2, compared to this one, that's 3, compared to this one, that's 4. So 1, 2, 3, and then you can buy it at the first or second green bar that follow this pullback. And if you get in here, you'll have paid a little bit more down here. You can see the price corresponding to it there and here, but then from here you won't have seen any negative profit either, because from here it start going up from there, pull back a little bit here, but then start going up. So you have those 2 entry points that you could have gotten as well there. But again, if you miss those windows, and then you notice it around this area, you have the first or the second green bar that follow this pullback that you could have purchased it. But if you are finding it around this area though, then you will try to wait, because again, this low is lower than this one, which is lower than this one. You have a downtrend here. You won't buy it. If you didn't buy it until when you're analyzing the stocks, you found it like this around somewhere here, you won't buy it there, because you'll wonder if it's on its way down again, because you have a downtrend here. So you'll want it to see an uptrend, which will be this low is higher than this one, this low is higher than this one, this low is higher than this one. So you have 1, 2, 3, and you'll buy at the first or second green bar that follow this pullback. But again, you'll pay a higher price, and you'll still be around the support line. But that's when you'll start asking yourself, are you too far from the support line, or is it okay to get in there? So those are things you are going to ask yourself. But being large cap stocks, growth or upward large cap stocks, they move slowly on their way up or on their way down. So especially on their way up, therefore you'll have time to get in the wagon at some point. And if the wagon is far gone, you can just not buy it at all. And look at any other stocks you have on your watch list that you need to be saving your money for to buy when you start leaving the support line, and just learn from this scenario for next time. Thank you so much for your time. We thank you very much for watching our video. Thank you for your comments, and thank you very much for subscribing to our channel. Thank you. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoup.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. For more of our swing trading tips, will you please check the list of the different related playlists in the description of this video. Thank you for your time.